You know the brand, right? I mean, you've probably seen their products everywhere, and you've definitely seen their co-founder Aman Gupta on TV. Here in India, boAt is a household name. They are an absolute marketing machine.
Their slogan, "Plug into Nirvana." It's catchy, their branding is totally on point, and they've done an amazing job of making themselves the go-to brand for a whole generation. They've basically sold us the dream. But today, we're going to look past all that marketing.
Because buried deep, and I mean deep, inside their official IPO filings, their own independent auditors use these two little words: material uncertainty. Now that's a phrase that should make any potential investor sit up and pay very, very close attention. It is a massive red flag.
Okay, so let's dive into this. In this explainer, we're going to break down the really serious financial concerns swirling around boAt's IPO. And to be clear, this isn't about the headphones. This is all about the health of the company you might be thinking of investing in.
So the first major issue is all about where the money's actually going. And this is crucial because it raises a really fundamental question. Is this IPO truly about funding the company's future growth, or is it about something else entirely? To really get this, you need to know a key term, offer for sale, or OFS. See, unlike a fresh issue where the company gets the cash to grow, an OFS is when the insiders, we're talking the founders, the early backers, sell their own shares. The money goes directly into their pockets. And here's the breakdown for boAt's IPO. A staggering 2/3 of the money being raised isn't going to the company at all. Nope, it's flowing directly to the insiders who are selling their stakes. Only about 1/3 of it actually goes into boAt's own bank account. Just think about those numbers for a second. Roughly 500 crores from the fresh issue, that'll go to the business. But double that amount, a massive 1,000 crores, is just existing shareholders cashing out. I mean, it begs the question. If they're all heading for the exit, why should you be rushing to get in? All right, let's move on to our second red flag, and you'll see how this builds. It's not just about where the money's going, but also who is leading the company. The timing of some recent leadership changes is, to put it mildly, highly suspicious. Get this, just 29 days, less than a month, before filing their IPO papers, both co-founders stepped down from their day-to-day executive roles. Aman Gupta, the face and the marketing engine of the whole brand, was suddenly no longer the chief marketing officer. This didn't really feel like a normal transition. Analysts were calling it a calculated pre-IPO pivot, and it raises some serious questions about their long-term confidence in the company. And now we get to the most critical part, the numbers themselves. This is what the company's own independent auditors found. And let's be real, if you can't trust the numbers, you just can't trust the investment. So the auditors flagged a major discrepancy. They found that for several years, the financial statements boAt gave to banks to get loans, well, they did not match their own internal books. This is a huge governance issue. Best case scenario, it's just sloppy accounting. Worst case, it really raises questions about whether numbers were being manipulated to get credit. The auditors also found something they called an asset-liability mismatch. The simplest way to think about it is this credit card trap. Imagine taking a cash advance on your credit card, which is due next month, and using it as a down payment on a house. That's kind of what they were doing, using short-term debt for long-term projects. It's incredibly risky and can lead to a sudden cash crunch if anything goes sideways. And honestly, it didn't stop there. The auditor's report was just filled with other alarms. Things like recurring cash losses, uncertainty about whether their overseas businesses could even pay their own bills, and even paying directors more than was legally allowed without getting the proper approval first. These aren't just isolated mistakes. They point to a whole pattern of potential issues. So let's put this all together. These individual red flags, they don't exist in a vacuum, right? When you start to connect the dots, they begin to paint a very worrying picture of the company's actual performance. First off, the whole growth story seems to have hit a wall. For the last 3 years, revenue has been stuck right around that 3,000 crore rupee mark. For a company that built its entire brand on explosive growth, a flat line like this, well, it suggests its best days might already be behind it. And what about the people on the inside? An employee attrition rate of 34%, that is extremely high. This often means that the people who know the company best, the actual employees, don't have much faith that their own stock options will be worth anything in the future. It's like a powerful internal vote of no confidence. So here's the bottom line. boAt has built an incredible, beloved brand. No one can take that away from them. But a cool brand and a healthy, trustworthy, investable business, those are two very different things.
So before you get swept up in all the IPO hype, the question you really have to ask yourself is this: are you truly investing in a company's bright future, or are you just providing the cash that allows the insiders to walk away?